Hello, everyone, and welcome to the Quant Financial Engineering Podcast. I have Gurraj Sangha that is coming back to us for another, which should be interesting discussion. I'm going to let him explain what it is, and I will tell you that it's called Cryptosazz. So, Gurraj, take it away. What is it? What was the idea? When was this created? You've got the floor.
Certainly. First of all, thank you very much for having me back on. It's always enjoyable spending some time here discussing, all things quant and everything related to it, even, from a psychological perspective as well. And with respect to CryptoSAZZ, we I'd been writing for some time on LinkedIn and other platforms, in part because I get quite a few people reaching out, just asking about finance, crypto, traditional finance, and quantitative side, how it ties all together, whether it's for their education or for networking perspectives. And so my wife had suggested, why don't we kind of put all this stuff into a website, a central location, and essentially create a newsletter out of it and talk about different things related to markets, traditional finance, and crypto. And so we've been doing that, for the past few months. You know, effectively, what we write about is the intersection of macro, quantitative finance, traditional finance, on-chain, and narratives. Like, how do you tie all those things together? A lot of the newsletters and blogs out there, um, there's very few that are quantitative in origin. Most, of these type of places, they're trying to pitch like the best five stocks or, using momentum models or things like that. But it's, here's a list, here are top five ideas or whether it's option related and kind of, you go from there. And what I realize is that although that's, well and good, uh, there's quite a few people who just, they would like to know exactly what's behind this. Like, how do you actually come up with an idea in the quantitative space, whether it's a systematic model or something else, and particularly at the intersection of traditional finance and crypto, which we see more and more of. And so the idea was, let's write about this stuff in a way that's digestible for a very broad audience, both from like students, but even high school students. I've got high school students involved, all the way up to hedge fund managers who've been in the space 20 plus years, um, places like Citadel and things of that nature. And so we just started CryptoSazz. It's it's not just charts, not just news. We look at the interplay of macro, crypto, on-chain, and quantitative stuff, and built our own models, proprietary models related to regime detection, emerging narratives, liquidity shocks, volatility clustering, all this type of stuff. And then we try to present each article we write about whether what's happening in markets. I mean, recently we've been writing about what's happening with respect to the trade wars and how that impacts various asset classes, but also how do you look at this stuff in a very quantitative way, um, with some fundamental oversight, and what are the different types of approaches. And a lot of stuff we write about most people just aren't aware of, even those in quantitative finance, because if you've been in the space, you're typically pigeonholed. You're working on one thing, maybe data loading, maybe something on the engineering side, and so you kind of miss the big picture. And so we try to explain everything to help, not only educate people in macro, crypto, and quant, but also give them enough tools so that they can take what we present to them and build something. And then if they have questions, then always happy to help them. Um, but it's you know it's essentially there's a lot of newsletters that are right about pure fundamental stuff. There's nothing quantitative of this nature that I'm aware of, and there's certainly definitely nothing at the intersection of traditional finance, crypto, and quant. And so it's essentially filling a niche in that space, for a fairly broad audience, and we continue to expand it. And as we get feedback from subscribers, hey, we'd like to see this, like to see that. And but it's a journey. It's interesting, and I really enjoyed it, and the subscribers are great.
Yeah, I could see that the topics. I guess if I you don't have to be into crypto, quite frankly, because some
Yeah,
of the right, it's a
yeah,
mix.
absolutely,
The
yeah.
mix. It's and where does crypto SAZZ comes from? What's
S-
the
Right. You know the origin of the name is you know crypto, because I've been in crypto for several years now, and the SaaS part, it's something my wife had thought about in terms of kind of a family origin, and that was special in meaning to her, and so we essentially brought those two together, formed Cryptosazz.
It's interesting enough that it's yeah, okay, so it's not obvious.
Yeah.
And that's what I like about this is SaaS. It means it must, and this is good because you understand crypto, but you don't know what anything has to do with SaaS, and it's good that
Right,
the
right.
mystery behind it. So you say, okay, I want to know, am I missing something? Now,
Okay.
for example, I'm looking at the latest Outlook, and for those that are not familiar with it, you're talking about background, 7 days, market absorbed. You're talking about the BLS commissioner. You're talking about the Fed chair. You're talking about right things that we've been hearing, and
Yes.
somehow you work it in to what you're trying to do.
Yeah, absolutely. One of the primary driving factors behind the website is to examine contemporary events and be able to discuss them in a way that's understandable to a broad audience, but also can yield either actionable trading ideas or strategies, but also give context as to sort of how the dots connect together. And I've been a strategist at very, very large hedge funds for a number of years, and the greatest challenge is how do you connect everything together and translate that into a portfolio of how you allocate assets. And with the current administration, and then every administration in the White House is different. I think with the current one, there's a higher degree of volatility from statements that emanate from the administration that impacts markets, much higher than probably any other that I can recall. Um, yeah, I'm going back several administrations, and which is interesting, but it also creates a lot of volatility. Tariffs get hiked one day, get removed 3 days later, and so all those type of things. And um, you know, as a strategist, you're often asked, okay, well, what does this mean? If the BLS commissioner gets removed, practically speaking, what do I do with that information? And so, we use quantitative approaches to understand how markets connect together with this type of information. So something happens, but how are the markets interpreting? How are they digesting it? The markets never lie. They always, give you information, and the challenge is like how do you interpret it and translate it into in action? And so we've developed models which essentially look at how markets behave over tremendous periods of time, how they interact with one another, and then take a snapshot of what's happening real time and what does it actually mean. So, like in the article you referenced, the BLS commissioner was removed. There's you know discussions or let's say very aggressive rhetoric going on with Russia, and all of those things get translated into market movements. And so the models that we develop look at markets and try to interpret, well, what does this mean? And, based on, and how are they interacting with another? Simple, one of the things, we notice is, for example, in this particular article, the setup suggests Treasury bill yields are going to fall, over the coming months, which in part you could argue is because the jobs data was weak. It suggests maybe the Fed will go, start actually reducing rates. On the other side of that, you have Chairman Powell, who's been, resistant, and the board as a whole has, I think they voted 9-2 at the last meeting not to lower rates, because they recognize that, in part the tariffs are have a long-term and inflationary impact as well as, core inflation. So that dynamic is going on, but at the end of the day, from a quantitative perspective, how can you translate it into action? And so that's what we try to write about contemporary events. What do they mean from a fundamental perspective, but also from a quantitative perspective? What does it actually mean? Does it mean, Bitcoin is going to go up or down? Is volatility in the S&P going to increase? Is the yield curve going to change shape? And we try to do it not from a fundamental perspective, because there's a ton of information on that, but from a quantitative perspective, and also what does it mean? And yet, we've developed a lot of different models on in terms of what are the markets saying about the narratives that are emerging, particularly in crypto, because crypto is exceedingly narrative driven. It's very highly emotional, much more so. If you remember the dot-com boom back in the late 90s, early 2000s, where stocks would take off just on rumors, or even more recently, like the AI boom, anything related to that. Well, crypto's like that all the time. So there's not pockets of periods in which crypto is narrative driven. It's always narrative driven. And so because it's narrative driven, what helps is if you can figure out what is the fingerprints or the footprints, within market activity, whether it's in through time series data or what we call on-chain data, information from the blockchain, and can you translate that into narratives that are emerging? If you remember the meme coins and like the Trump coin, all those things were surging, and prior to that there was decentralized finance coins, liquid staking coins, all this. So these keep changing. And so, the website, a lot of the information we produce on the different pages is taking an enormous amount of fundamental information, running it, creating different quantitative models around that, and then translating that into actionable ideas in a way that people can understand.
Yeah, because I'm looking at this interesting article on nuclear deadlines and precious
Right.
metals.
Yeah.
The clock is ticking. I mean, the geopolitical pressure. So you're referring to this submarine situation, I guess, and
Yeah.
then
Yeah.
fuse on so okay. So then what? So
Right. So, even in situations like that, um, when we look at, so we have events happening. We have the deadline that was given to Russia by Trump. I think it was originally 50 days and then reduced from 10, to 10 to 12 days, to come up with some substantive progress with Ukraine. And that in and of itself, is interesting. But it doesn't, 50 days is a fairly long time. But when you reduce it to 10 to 12 days, and the Russian minister, Medvedev, um, equally responded aggressively. The question that a hedge fund would have, or trader would have, is does is this does this suggest that there's an increase in geopolitical risk? Um, if it was something imminent, we would see that translate into the movement of the dollar in rate, and probably in equities. Um, but it's not imminent, and so the next question is, okay, is something happening in the markets which we can kind of pick up, early indications, sort of like a canary in the coal mine, that from this information that we can pick up early indications and then translate that into potential trajectories or potential actionable ideas. And so that's what we do. We look at this type of information and say, okay, well, what's happening in markets? So one of the things the models noticed was that in the precious metals area, in gold and silver in particular, um, the from a quantitative perspective, it seemed to match, the type of movement we had seen prior to significant advances. And we wrote about this, earlier, I think earlier this week, And so far they've followed through. We've seen a meaningful rise in gold and silver, but it's because of the way the models were structured. They were able to pick up this type of activity. And so as we see that, we write about it, and for the users, it gives them enough information to either make short and long-term investments, or short or long-term trades, and position. We give suggestions. We're not an investment advisor, so it's very broad. I mean, you need to do your own research, but try to give them enough information so that they can actually do something with it.
So you're basically trying, yeah, you're essentially getting them you're getting them things that they should be thinking about. They should be
Yeah,
aware, and they should see how these things are connected, so they don't come
yeah,
totally unprepared. And you probably know Didier Sonnet. He's
yeah.
got this thing. I think
Yep,
when I
yep.
saw it, it reminded me of this
Oh,
website that he also has, right?
yeah. He's done this is done some great work. I mean, the log periodic power law, for which he is famous for, um, was really when I've done work on that, and that's one of the things we use from time to time. And it's an interesting way of translating behavioral finance into through a quantitative prism, and see what the signatures are in markets. And it works across different time frames, and it can be really interesting. And so in a sense, that's part of what we're trying to do, is look at what's happening in markets, both through a fundamental prism and a quantitative prism, and see, can we pick up early enough, um, what may happen in the future. If you look, there's a report we had issued, actually prior to, even when I was kind of privately doing this, back in January, late January, as to what was likely to happen with the Nasdaq index, rates, crude oil, the dollar, and it followed almost precisely over the subsequent 3 months. I mean, like eerily accurate. And it is not because of some great insight I had with respect to fundamentally what's happening in the market. It's just that markets, if you build interesting enough models, they can pick up signatures well in advance as to what's likely to occur. And so that is effectively what we try to do. Take a lot of information, run it through different quantitative approaches, and what does it translate to? What does it mean? How does it all connect together? And what can you do with it? And that's what makes our site unique, because most of these type of sites, they give you a lot of information. Um, what's happening with the BLS commissioner? This is why he was let, or she was let go. There's someone new. There's a new Fed governor that's going to be appointed. Great, but what does it mean for the dollar? What does it mean for the yield curve? What does it mean for Bitcoin? Like, what do I actually do with that? And so we try to fill that second part of the question, not only what happened, but okay, well, what can you do?
And it's a fine line because when you listen to I mean, you have the news,
Yeah,
but unfortunately, the news now is never just the news. And even
yeah,
when you look at the Wall Street Journal or you could the Financial Times, you could see the bent that is put on the wording that is used as to, like for example, the BLS commissioner. I mean, obviously we know. Okay, the numbers are way out, statistically significant differences.
yeah,
We also know that they have had a lot of issue internally
right.
that people don't necessarily respond to those surveys anymore.
No, absolutely. And that's one of the uh, practical challenges with this type of data, the frequency associated with it, and also, the like the initial surveys tend to have very low respondency rate, and then they rise over time, which is why you keep getting revisions. So you will never have an employment report without revisions. I mean, I've been doing this for
No, no,
20
exactly.
plus
And
years.
that's what's happening. No, no,
Yeah,
no, totally.
yeah,
But at the same time, they will say, well, and also they have less people working in BLS because of the people they let go. So then
yeah,
there's a lot of noise around. Okay, so what
absolutely.
you're saying it's a president's fault that this is happening because he fired a
Yeah,
bunch of people.
Yeah,
No, I'm just bringing, and I notice there's more and more noise, and then you have to figure out exactly what is driving the article and what's really happening.
absolutely, absolutely, and that's
So people
always
get confused. It's confusing everyone because it's so easy to put a tidbit of a bent because now the story is really, well, now that this new BLS commissioner is coming in, well, now we really can't believe what this person is going to say
no, absolutely, and then
because
absolutely, and then that becomes additional noise is
it's
if
noise.
you
Yes.
already were skeptical of the data and and you are of the mindset that any new person will bias the data one way or another, then that adds an additional layer and of noise. And so it behooves you to look at other sets of information, which, as best as you can tell, are unbiased and either validate, what's coming out of the government or not. And so that's and the truest barometer of this is at the end of the day markets. I mean, there's way more participants who have access to broad sets of information, and it translates to what's happening in prices and volume and things like that. And so that also helps, validate if information from anyone's source is valid or invalid, because if you don't believe it, the markets are going to go in a certain direction. And then no matter how big you are, you can't change that trajectory.
No, I think there is a real need for products such as these that tend to be away from the mainstream because at the end of the day, they need eyeballs to look at and if you tell people what they want to hear, then they'll listen more. Then obviously that's your goal, right?
Yeah.
Here the goal is different. Here is the goal is truly to inform and explain what's going on. And because the topics, and then of course you put some quantitative bent to it, but even if you're not quantitatively oriented, I mean, the topics that are being addressed, and you come up with, I'd say that you have one August 1st, then you have August 2nd, August 3rd, August 4th. So you coming up with something every day?
Yeah, we
Almost.
try to the cadence is typically a few times per week, sometimes more often than not. It can be driven by market events that are significant, and there's sort of a few parallel tracks. One is market updates related to what's happening across the space, traditional finance and crypto. Looking at through a quantitative lens and translating it into actionable ideas and themes. And then there's another track is just interesting things in the quant space, which could be of interest to either hedge fund people or investors. But then also we write about different things that are happening in the world. One of the things we wrote about was solar risk and magnetic drift, and what does it mean for finance, and what that was it's sort of out of left field article, but I read a lot. I read a lot about what's happening not only in markets and finance and in economics, but just happening in the world. Like the volcanic or the recent earthquake in Russia, and then the subsequent potential volcanic eruption, or at least small ones, which hadn't occurred 500, 600 years. Does that mean something? Is it an isolated event? I mean, can we connect it to other information? And when you actually look at that area and kind of study the frequency of these type of events, there's actually real potential market impacts. And so, that's the other area. I try to like investigate what is happening that no one really is paying attention to or even writing about. If there's an EMP attack because of the increased, let's say geopolitical conflict and risk, what does that mean? Is the U.S. prepared for it? The new Madrid fault, no one's written about that. It's only erupted in almost 200 years ago, back in 1811. What could that potentially mean? And so there's kind of these sort of pockets of interesting information and articles, which anyone who's got an interest in the world, it would make sense to at least kind of understand some of these things. But yeah, it's a lot market oriented, crypto, traditional finance, but other things happening in the world which could
No, but
potentially
I
be
saw that
impactful.
article and I said, what the volcano, what does that have to do with anything?
Yeah.
And it's interesting. I mean, you have to subscribe, but to get the full story. But Because you're the one that told me something interesting once about because I don't know if you've done some study on that, further study, but remember we were talking about investing, quantum mental investing, where
Yes.
we're all trying to figure out what the noise is and who's doing what. And but then one thing you brought to me once was, well, what about the people themselves that are making the decision? Has everyone thought about looking at what, you know, their I guess their psyche or their approach?
Yeah,
What was it all
absolutely.
about? That's a quantum. What was that all about again?
Yeah, yeah, that was and because one of the things that and probably we see a bit more of this now is that um, there's strong behavioral biases that have always been present, which drive markets, fear and greed. But you go through these periods of time in which um, the behavioral bias has a much more profound impact in the data that's being generated or exported. And so, uh, if you have, for example, let's just say, and we don't know this, but let's just say the Bureau of Labor Statistics, where it's very biased one way or another, and so there was a concerted effort to have the data be, biased one way or another. You need to pick up on that because otherwise, you're taking noisy data, which is even more noisier. And so, it's important to understand, what is the psychological and behavioral biases of, large entities and large players in the space. And then like, how do you do that? Like, is there a quantitative way to pick up on that? And there is. I mean, one of the simplest ways that people do in this space is understanding sentiment. Try to understand. You mentioned the article you were reading, the type of words they use, where they place the words. I mean, you could rewrite the article with the same information and give it a very different feel. And so, it's important to try to understand that and then create. You can create indices around this type of stuff, and so it gives you some reference, some benchmark as to compare. Okay, is this article really biased this way or is it biased that way? And if so, how do I translate it into something actionable? So that's really under the broad area of behavioral finance, which is is a fascinating area. And particularly if you look into neuroscience and sort of the things that drive dopamine effects and things of that. And actually, that's what I talked about at Princeton University last year, was the impact of neurobehavior on markets.
I know, and this is where I think there's a need for this type of products, especially in social media, because there's a lot of information out there. There's a lot of noise.
Yeah,
I mean, they literally give you what they think that you want to see. And the same way when you flip, people have this idea of like on shorts and YouTube and TikTok or whatever that you're watching what you want to watch.
right.
Well, I'm not so sure they're watching what they think that you want to watch, but who knows which bent it is because there's so much information. Nobody searches anymore, right? Nobody
Right,
searches
right.
for information. They just say, okay, what's available?
Right, right, right.
So if I want to listen to this particular channel or whatever, I know what I'm going to hear more or less.
Right.
Um, and there's so much information, so much noise nowadays that there's got to be a place where say there's maybe some calmness, and maybe you
Right.
talk about volcanoes at the same time you're talking about crypto and gold, and maybe if you shock the people out of them, maybe they'll realize that, oh, maybe I've learned something today. So it's always interesting, some of the things that you come up with. Well, great. So.
Yeah.
Um, Thank you very much. I'll put a link into the discussion, and thanks for dropping by.
Great. Thank you. Thank you for having me. It's always enjoyable.